big hello and welcome to Sanderson TV, our second episode for 2022. There's been an election called, there's plenty going on, the budget's just dropped and Roy Sanderson's along for the ride, as he always is. Roy, plenty going on.
Yeah, there's a lot happening. It's been a great month. Nice to be here.
And speaking of dropping, unfortunately the Blues have dropped a match on Sunday. What happened there against the Gold Coast?
Yeah, let's go straight to economic factors. I think let's leave the footy out of it this week.
Oh, fair enough. 3-1, still going okay, Roy, but some room for improvement. As we mentioned, there's an election imminent and the Treasurer, Josh Frydenberg, delivered the budget late last week, or early last week, I should say. And Roy, we want to have a look at that as part of our news headlines today because there's plenty to dissect and analyse. And first up, we want to talk about some of the major economic parameters that have been released as part of the budget. What happens in a budget, for those that seeing it for the first time, is they release what they're expecting some of these figures to be, not only next year, but in the medium term. And the budget paper references the medium term a lot. And these are some of the factors that we talk about every week on Sanderson TV: real GDP, employment, unemployment rate, CPI, wage price and nominal GDP. Any figures in particular that stick out to you there, Roy?
Yeah, certainly the unemployment rate is going to drop, and they're predicting that. I think it's going to drop dramatically because I'm feeling a labour shortage right now as we speak out in the marketplace. And also wages growth. I think they might have got that wrong because I think wages growth is going to jump through the barriers and it's going to be 5% plus. And I think, again, I'm seeing that out in the street with industry and labour shortages.
And particularly the relationship there between the CPI, Consumer Price Index, and the Wage Price Index. You can see there that the CPI, or inflation, is expected to outpace wages at least during the latter part of this financial year, and not until next year will we see a reversal of that. And that's, that's been part of an ongoing conversation, in the political realm. How do you get wages to outpace the CPI? Because at the moment, labour shortages are meaning that that there are some supply issues.
Yep, agreed. We'll have to watch this space and see where it all ends up.
In terms of the budget on a more macro level, let's have a look at some of the aggregate numbers, because we've heard that the deficit is going to be reduced, so it is a contractionary budget in that sense, and it is a big deficit that we've got there as a result of some of the stimulus that was given out during the COVID times. But one point that I want to make here, Roy, is that you can see here that the tax receipts are expected to go from 2021-22 from 512.5 down to 508.4. So it means the government are going to take less tax from people and from businesses. Now, that means that obviously there's going to be tax cuts for people. Was that a product of an election being called, or is that the correct thing to do in this time? Because they still need to stimulate the economy?
Certainly a difficult question, whether it's sensible politics or whether it's an election comment. We do know that the low middle income tax rebate was increased from $1,080 to $1,500. So everybody gets a bigger tax refund, and that is going to show up with less tax receipts. But there's a sunset clause on that. That finishes in 2023, and that might explain why the tax receipts are expected to increase after that.
Yeah, and you do mention that. Tax receipts for 2022-23 at 508.4 expected to increase to 541.8. To me, Roy, that indicates that the government is aware of a need to increase tax receipts, but they don't want to do it before the election. I understand that from a political perspective, but to me, potentially putting a strong national agenda out there that is going to be funded through tax receipts. I mean, there's not many ways that governments can fund things, and tax receipts is the obvious one. Putting that on the line ahead of an election would have been bold politics, and potentially they missed a trick by doing that. But that time will only tell on that one. And as you say, it's a really difficult area for governments to negotiate with an election so close. Let's move on to some of our actual indicators, and Roy, the unemployment rate has been in the news recently because the opposition leader earlier in the week stumbled not knowing the unemployment rate. It is 4%. What did you make of that?
To the opposition leader, you need to be watching this show because we've been putting this graph up each month for some time. It's 4%. So when you get asked that, you know it's 4%. Even if you said around 4% rather than around 5%, you might have got a tick. But yes, it's 4%.
Yeah, it wasn't a good look for a opposition leader who needs to convince the people that they can manage the economy. To be so far out was not a good look, even though it was a gotcha question. I think we accept that it was a bit of a gotcha question, and we saw that members of various political parties now being quizzed on these numbers, but it wasn't a great look for the opposition leader. The other thing that has been mentioned about that unemployment rate, as you spoke about, Roy, is it is predicted to continue to go down, which is quite interesting. And we saw on last time's show that job advertisements are at record highs. So, it is interesting to see how that unemployment rate is going to react over the coming months, and we'll keep an eye on that. Interest rates for the 16th month in a row, Roy, are going to remain flat. The RBA deciding not to raise interest rates. Do you think that's a product of politics with the election upcoming?
I don't think so, because there was a time on this graph when there was an election had been called and we had interest rates drop. And the RBA said they are non-political. They made that decision. Nothing to do with the fact that an election had been called at the time. So I believe the RBA will stay out of politics.
The other graph that we look at every time on this show on RJ Sanderson TV is consumer confidence. And the March number, as we mentioned last time, is flat, 96.6. It's comparatively lower than any of the months over the last 12 months, and a direct reaction to the conflict in Ukraine. But the interesting one that we have now got the March number for, Roy, is business confidence. And we predicted on this show last time that there'd be a drop in business confidence, but have a look at that. It's already, it's actually increased. And the National Australia Bank, who put this number together, or who do the research into this number, actually a little bit dumbfounded themselves and can't really offer an explanation as to why business confidence is up.
I think it's surprising, but gee, it's great for the economy, because when the business confidence factor is up, it means that they're going to spend more money. So that's really good and healthy for the economy. I'm also surprised that it's up.
We talked about how consumer confidence is probably slower to react than business confidence, and potentially, the business confidence numbers of December are already reflecting, the conflict in Ukraine and some of the uncertainty there. So perhaps, that's already been factored into the business confidence numbers prior, and that's why we see the increase, but only time will tell on that one. House prices, Roy, that's another area that we look at very closely. Now, there's a lot of numbers on this page. We don't expect anyone to be able to dissect them very quickly, but what I do want to say, Roy, is that on this page, generally, we see a lot of green numbers because house prices over the last few years in particular have continued to skyrocket. But what is quite interesting is in that month-on-month change on all dwellings, Sydney and Melbourne, there has been a slight easing of prices, 0.2% in Sydney and 0.1% in Melbourne. And for Melbourne, that's the second drop in a row. So that is quite interesting. Do you think we're seeing an easing of house prices nationally? I'm confident that is absolutely 100% correct. I'm hearing it from real estate agents, people out on the market, in the market, saying that demand has dropped away a little bit. I don't think 0.1% is reason for concern. It's still just under 10% for the year, which is the second column, and Sydney over 17% for the year. I think it's a softening of the market that's been necessary, and I think it's good that they've just evened out a little bit. And interest rates potentially expected to increase, later in the year. It'll be really interesting to see how that particular graph looks by the end of this year's season of RJ Sanderson TV. Perhaps some more red numbers. Who knows, though? Obviously, Roy, we remember back in 2020 when the pandemic first hit, there was the doomsday scenarios. House prices might drop by 20%, 40%, some of the banks were saying. And then, of course, we saw that basically no one sold their house. There was no supply of houses, and house prices ended up increasing quite dramatically. We saw the year-on-year numbers there. Still, very, solid return on on investment for homeowners across the last couple of years?
I would generally like to see the property market flat for some time so it's not getting out of hand. So if it was flat throughout this year, I think that would be good for house prices and the economy.
The stock market is perhaps the other area for the mum and dad investors. You can go down the property path or you can go down the stock market path. And I'm sure there's plenty of other areas. It's a simplistic view of it, but it is interesting to look at the last year of the stock market. You can see how quickly the stock market responded to the conflict in Ukraine, or as it was at that time, the potential conflict in Ukraine. But you can also see how quickly it started to respond, and perhaps that's something that we're seeing in the business confidence number, as we mentioned earlier, Roy. And
I know we're talking to Tony Sarai shortly, but the reality is the stock market is a leader in indicators from things that happen around the world, and it's reacted quite good. I often get asked, when is a good time to get into the stock market? The reality is now. It always is a good time, because as long as you're sitting in for a long time, don't try and pick the bottom of any market.
Roy, we always put the hard questions to our guests on this show and to politicians more broadly who we know watch the show. You've told us that the Treasurer is an avid viewer of this one. But now it's time to turn the attention to you, because it's time for question time, and we've got a couple of doozies for you today. Starting with a great tax question that I love that's come through from one of the viewers. I work from home 3 days per week. I have a little dog that yaps often, and especially when I have work Zoom meetings in place. I put the dog into puppy daycare for 3 days. Can I claim that as a tax deduction?
Great question. Where do you stand on that as my trainee tax consultant, Dave? What do you think?
Oh, well,
it's related to work?
Yeah, so, there's costs, I suppose, associated with work that you can deduct, computers and desks and anything to make the work environment comfortable, I suppose. So maybe it's a tax deduction?
I'm going to have to say to the listener that it's not a tax deduction. You cannot claim it, unfortunately. I would suggest you put the dog in the laundry or outside, but you can't claim it. Just like if you have a young child at home that cries throughout the day or needs a lot of attention and you decide to put them into childcare, you cannot claim childcare either. So no claim for that one, Dave.
Yeah, bad luck on that one. Next question. I will be paying a lump sum of $10,000 into my super fund before 30 June. Is there anything special I need to do to claim that as a tax deduction?
Dave, probably two things to check. Firstly, we know the cap that you can put in and get a tax deduction is $27,500. So just calculate how much your employer has put in first. And if that added to the $10,000 under $27,500, that's a tick box. And secondly, when you make the contribution, you need to lodge a form with your super fund called a Notice of Intention to Claim, which tells the super fund that you're going to claim the $10,000 as a tax deduction, and that form has to be lodged before you lodge your next tax return. So get that in so that the tax office find out from the super fund that you are claiming that amount as a tax deduction.
Roy, we mentioned interest rates on this show every time that we meet, and obviously interest rates dictate what is on offer for home loan rates and for mortgages, and you love to keep an eye on these because there is incentives for people to refinance. If they're on a bad deal, they may have had a deal for a long period of time, and you've got this case study for us.
Yeah, I thought I'd share this today because we are pretty certain that interest rates are going to go up. This is a live example where a client said, would you mind just checking if my rate that I'm paying is okay? It costs nothing for us to do that. And I'll say any broker can do this, but certainly RJS Loan Solutions are big in this space. They were paying 3.25% and felt that was pretty good. We got them a 1.89% rate plus $3,000 cash back in their pocket. And over the life of that loan, which was going to run for, I think on memory, 20 years, they're going to save $123,834. That's a huge saving that they will save over the life of this loan simply by going to a lower interest rate. So the message here is you should have your loan reviewed, whether it's your home loan or your investment loan, and have it looked at by a broker.
And particularly now with the potential of an interest rate rise coming up, it makes sense. You can fix your loan potentially if that is the way that it ends up falling. So now's a good time because the RBA are saying it's only a matter of time before rates do go up. Roy, also for businesses managing COVID at the moment, there is a particular grant that may be of interest that I think is worth noting for our viewers.
These grants are Victorian based, and I know this show is viewed all around the world and interstate, but it's Victorian based. The Victorian government have offered ventilation grants. There are two types. One is up to $500 where you get a rebate or reimbursement for equipment or labour where you have spent money on an area where customers visit. So it might be a shop, could be an office with open reception area where you've spent money. It might be that you've purchased a humidifier that sits in the corner. You can get that receipt and get reimbursed. And the other one is a grant, dollar for dollar match, where they will reimburse you anything from $1,000 to $5,000 if you have your air conditioning or ventilation system redone. But again, it must be in an area where customers will sit or visit. You have to be a registered business, has to be commercial premises, and those are the tick boxes. But very few people know about them, and there's an expiry date there on the screen, so make sure you get your application in for anything you've spent on ventilation in Victoria to get the rebate or the grant.
And I'm assuming RJ Sanderson can help people with the applications if they need to?
Yes, and I often get asked how people find out about these grants. Certainly they're on our newsletter that's gone out today. We make sure we get the word out. And if you're not a client of RJS, at least subscribe to our newsletter on our website so you're getting that information no matter which accounting firm you're using. rjsanderson.com.au for more information. Right, this is one of my favourite times on the show.
I'm sure that you've been unhappy since about the 10-minute mark of the first quarter on Sunday, Roy, and there's been some anger and aggression that's been starting to build up over time, and now's the time and the channel to get rid of it all, to vent it all out on Roy's rage. Roy, what has got you upset today?
Well, we know that the budget announced that the government were going to drop the fuel excise tax from 44.2 cents to 22.1 cents from Tuesday, 29th of March. That was a big tick, okay? We're all happy with that. But what we didn't know at the time, certainly not until we started lodging and completing business activity statements, is that the heavy vehicle rebate, that the fuel excise rebate that we're allowed to apply for, where the customer gets a 17.8 cent rebate, if you like, a discount off all the fuel they spend if they drive a heavy vehicle, or for other businesses that are in agriculture, fishing, forestry, mining, and there's a few more on that list. I just cut the list. They got the whole 44.2 cents discounted on their business activity statement. Well, since that announcement from Tuesday, 29th of March, their rebate is zero. So it's not the government that's paid for that. Yes, it affects householders and normal users, but they've taken the money off businesses, not just individuals. And I think that's pretty unfair that they did that. It wasn't announced at the time, it wasn't realised at the time, but as it affected businesses. It has no effect on businesses.
And as you say, it's not a very well publicised, fact, because the government's taking a lot of credit for reducing fuel prices, which, as you say, the way that they've funded it is through just taking, robbing Peter to pay Paul, as you would suggest, as opposed to just genuinely taking it out of the government coffers.
And one of the things we said is that this is a great policy at the time because of the transportation costs will come down. But the reality is it had a zero effect on transportation costs because they dropped the price at the pump, but they dropped the rebate. So no effect for any business at all.
Interesting. No, fair. I think a couple of zingers to get off, to get us away in 2022, Roy, and looking forward to next edition of Roy's Rage already. Right, let's turn our attention to our special guest today. Tony Sarai is an Associate Director with RJS Wealth Management, and he's here to talk to us more about the stock market with so much going on around the world. Tony, welcome to RJ Sanderson TV.
Thanks for having me, Dave.
Tony, plenty going on in the world at the moment, and we know that there is the ongoing conflict in Ukraine. How has the stock market been impacted in recent times by that one?
We actually saw that the market have initial, I'll say, close to a correction of up to 10% early in or late January, and we've seen some recovery since. And that recovery's come on the back of the fact that the sanctions have been put in place, and there's more sanctions that are ongoing. However, much like any news cycle, as it tends to go from the front page towards second page or further down the track, the market then seems to move on to the next big ticket item, next big thing.
Tony, does the fact that we've just had an election called, what impact does that have on the share market? What's happened and what are we expecting to happen?
Yeah, markets don't like surprises. That's with company results, that's with anything in general. And we can use Russia and Ukraine as an example in terms of that. So not that it was a huge surprise in January, February, but certainly that had an impact. And in terms of the election, that'll be similar as well. So at the moment, the markets say that Labor's in front. I think whether Labor or the coalition get in, I don't think there's going to be significant market movement. I think what will impact markets more is if there's a hung parliament, because that will stop each party getting their legislation through that they had planned, and that will certainly impact in terms of markets. And what that does, it creates uncertainty. And if there's uncertainty, well, you don't know which way to go.
I agree that a hung parliament would be the worst outcome for Australia. Are there any policies for either of the major parties that will have a direct impact that you think on the share market or taxation? Like last election, there was some huge big ticket items, franking credits, etc., that were going to affect a big part of the population. Have you seen anything in the policy documents to date?
Not to date. We've had the budget that's come out, which has had some sweeteners in there to help with the cost of living. And I think that both parties are appealing to the masses in relation to cost of living. So that's been the number one ticket item. But at the same time, there's been nothing in there that will, or has, that we've seen, that will impact companies directly, whether it be positively or negatively. And as saying earlier, markets don't like surprises, companies don't like surprises. So if it's more the same, you'll see that that'll be okay for markets. And markets will continue doing what they're doing at the moment.
Tony, interest rates on hold for the 16th month in a row after the RBA's meeting earlier this month. It just seems inevitable that the rates will go up eventually. What impact, if any, do you think that'll have on the stock market, or has the market already taken that into consideration?
Great question. So going back, I think late Feb, we actually thought that rates would go up in June, and which, as we get closer to June, they certainly look like they will. They're talking about a number of rate rises. Now, once again, markets don't like surprises. So in saying that, that'll start to be factored in depending on how things go. And what I mean by that is, I actually think that even though the economists are saying there'll be a number of rate rises, whether it be this year and going into next year, the impact that has to clients and everyday people will not be seen straight away, or businesses. So when rates go up, so let's say, and I'll give you an example. If your mortgage payment is due on the 1st, and on the 2nd, the rates go up, well, you're not going to feel that impact for at least another month. And so by the time the data comes in, it may be another month after that. So unless, and that also impacts consumer spending as well. So as an example, if my mortgage rate's gone up and I'm paying more for my mortgage, it means I spend less over here as well. So I actually think that they may not go as aggressively as everyone's thinking that they will. But it's also good for media to talk things up as well. You know, we're going to have so many rate rises, but the market will price it in, and they will wait for the commentary that comes out of the RBA when they do raise rates.
Tony, the stock market has been up and down over the last 12 months, and I'm curious to know what would happen if there's a ceasefire or the Ukraine conflict is over. Is the market around the world likely to jump up if that is announced?
That'd be good news. I'll take that as a hypothetical, because I actually think that it'll drag on. If there's a ceasefire of sorts, that'd be amazing. But it'll be positive for markets, because markets will think, well, can we go back to normal? Can we go back to importing energy from Russia as a result, or can we go back to getting goods from the Ukraine? So those supply issues that we're having from that part of the world. If it frees up, that'll make life a lot better. In saying that, we're suffering supply issues, even domestically, let alone parts of the world. So that will impact us on a day-to-day basis. But markets at the moment will take that as good news, Roy, if there was a ceasefire. Absolutely.
Tony, fantastic to have your insights as always. Thanks so much for joining us on RJ Sanderson TV.
Thank you. Have a wonderful Easter, David and Roy, and chat to you soon.
Thanks, Tony Sarai, Associate Director there with RJS Wealth Management. Some great insights, Roy, and yeah, as you say, there's some, potentially different outcomes in some different spaces that could impact the stock market. We'll just have to wait and see. Yeah,
it's great to have Tony's insights. Love it. Good operator.
Roy, that's all we've got time for today. Thanks so much for your time. Have a fantastic Easter. Before we go, as we mentioned, wasn't the best performance against the Gold Coast. Can the Blues bounce back against Port on the weekend?
Well, Port have never gone 0-5, so this would be the first time in the history of the club, which means they're going to fight tooth and nail so it doesn't happen. I don't think it's going to be an easy game.
Geez, I don't know about the first time that Carlton have gone 4-1 either. That might be some sort of historical anomaly for at least the last few years, Roy. I don't want to get too far into that. But thanks so much for joining us. Have a safe Easter. Enjoy some time with some family. And thanks to everyone for watching. This has been RJ Sanderson TV, and we'll see you next time.